What an inspiration. My kid was crying that night. We had many conversations later about it, but he's inspired by that. So we talked about the governmental role, we talked about the chief scientist, we talked about the academia and how academic research can help your startups, and we talked about the entrepreneurship and the dream that you need to have in order to make it happen. But one essential element for any startup to succeed is to get the right investors to back them, to get the partners for the dream. And the ecosystem in Israel is built, actually, we have more than 250 investment vehicles in Israel to sponsor innovation. And cybersecurity is one of the main, actually, fields of innovation in Israel. It brings me a great honor to invite a friend and a very qualified investor in cybersecurity with many success stories, Yoav Leitersdorf, the managing partners of Wild Venture, to invite these co-panelists for a panel about investors' spotlight on innovation in cyberspace. Thanks.
Yeah, that's a very hard act to follow, the Space IL. Hopefully we can be as engaging. If the panelists can come down. And do we have Sunil here? Oh. Great, well, a real pleasure to be here at Cyber Week. So my name is Yoav Leitersdorf. I'm the managing partner of Wild Ventures. We are a seed stage, early stage fund, VC, focused on cybersecurity only. We're headquartered in Silicon Valley, but we invest here in Israel. And many of our entrepreneurs, like Ami here in the front, moved to the U.S. within about a year of our investment and go on to create large cybersecurity companies in the U.S. We always partner with U.S. VCs for the Series A's and B's and C's, leading VCs, and many of them are here, the ones that we would love to work with and admire. And what I'd like to do is I'd like to let my panelists introduce themselves and tell you a little bit about who they are and what they do, and we'll start with Karthik.
Thanks, Yoav. Very nice to be here. It's always a pleasure to come to Israel. My name is Karthik Subramanian. I'm a partner at a fund called Evolution Equity Partners. We are based in Europe and Palo Alto. We invest primarily in cybersecurity. I would say we are stage agnostic, but most of our investments have been in A's and B's, and we do some later stage investments as well.
Hi, everybody. My name is Ariel Tseitlin. I'm with a venture firm in the Silicon Valley called Scale Venture Partners. We invest in early in revenue enterprise software, so anything post-seed once there's a product that is starting to sell in the market. Anything in enterprise software, my own focus is around security and infrastructure. And the firm's been around for a few decades. We're on our sixth fund, investing at a $400 million fund.
Hi, everyone. This is Sunil Kurkure. I'm an investor with Intel Capital. I think everybody knows Intel Capital, especially in Israel. We're focused, we're stage agnostic. We're probably the largest global VC in the world. And we invest across many areas, but primarily in anything that touches data, frankly, data center, enterprise software, and cyber. My focus is enterprise software and cyber.
Hi, I'm Nitin Chopra. I'm at a venture firm called Shasta Ventures. We're also based out of Silicon Valley. We're investing our fifth fund right now, which is a $320 million fund. We've been in business for about 14 years. And Series A, Series B, that's sort of our sweet spot. We do some consumer tech, but mostly enterprise software. My focus is all basically what these guys says in infrastructure, a lot of data, a lot of cybersecurity. So I do what these guys do, just not as well.
That's great. Good. So I think we'll kick it off with talking about what value-add investing means in a cybersecurity context. So we all try to add value to entrepreneurs. What are some ways that we do that?
Sure, I can start. So we're a big believer in value add. So you see my fellow panelists here, we all have capital, and most entrepreneurs can get capital from anywhere today in the world. The value add we look at is kind of threefold, I guess. One is obviously around product and the problem you're trying to solve. So anything that you can leverage Intel technology, we would love for you to do that. So it's one way that we add value to our companies. The other is the traditional go-to-market, which many investors do, and we just do it on a larger and global scale. We have folks all over the world, including EMEA, Israel, and then obviously in APAC, and we're just able to get to the largest Global 2000 customers for our companies. And the third area I would say is around team development and team building. We've added this kind of capability over the past few years at Intel Capital, where we have folks, looking at not only folks that have moved away from our companies, moved on to newer companies or doing something else now, to try and help our companies to build their teams. So we're very active in all three facets there.
Let me kind of break it down into the way I think about it, and the way we think about it is sort of hard value and soft value. So a lot of the hard value components, which is sort of helping with team build, introductions to customers, just partnering with them as they think about sort of go-to-market strategies, whether nationally within US or globally. I think those are extremely important, and to me, that's in many ways table stakes for most venture firms. And then the other is soft sort of value add in many ways, which is, it's like you truly want to be the first call when the entrepreneur makes. It's like when you're actually making the hard decision on who to hire and unfortunately sometimes who to fire. I think those are the places that I think actually kind of get lost a little bit, and I think that's actually equally as important. And that's not to discount the value of kind of customer introductions and so forth, which I think is critical, especially in cybersecurity and especially in early stages of the company. But just really from a value add perspective, it really is across the board.
Yeah, we because of the stage where we invest, which is particularly when a company is scaling and growing. We've focused a lot of our firm's resources on helping companies navigate that scaling stage. So we've built a portfolio operations function that is essentially made available to all of our portfolio companies to help them with some of those difficult decisions that they encounter along the way. It takes the form of a number of different things. The first thing that we do is, we've got hundreds of companies that we've seen or have invested in, and we've collected benchmarks on each one of those companies. As they're going from their first million to their 100th million of revenue, how much of their revenues are they spending on R&D, on sales and marketing, on G&A, and so on. And so we make those benchmarks available to our portfolio companies. And in fact, this year, we've also decided to open source that in the form of Scale Studio. So we made that available to the broader community, where if you're an entrepreneur in a company, you can go into Scale Studio and enter some of your data and then get information about what quartile you fall in terms of growth, in terms of sales efficiency and things like that. So that's one of the areas that we try to help with the growth. There are other areas like helping companies figure out what the KPIs they should be using and as they go through different stages of growth, as well as different playbooks for dealing with some typical go-to-market challenges.
I think my peers here covered a lot of the ground that most of us try to help our entrepreneurs with. I think of myself and many of my partners at Evolution as accidental VCs. We were all operators, entrepreneurs in our prior lives, and we somehow at some point decided to become VCs. And one of the things that we try to do is help our entrepreneurs not make the same mistakes that we all did. And if we have gone through that journey that you are trying to go through today, how can we take those lessons and make sure you do it a little bit better? You'll all make your own mistakes, but maybe not the same mistakes that we did, so that you get to a success milestone faster or better. And so that's one thing that we try to help with. And other one is, since we've all been an operator in some way, shape, or form in our prior lives, we've built an extensive network across the globe, Europe, US. How can we help our entrepreneurs take advantage of that? Whether that is go-to-market, whether that is engineering resources, whether that is product building, We touch each and every one of those aspects during the life cycle of a company.
Actually, I'll stay with you, Karthik, because I mean, your background is very interesting, having been a corporate VC at Cisco and having had done some very interesting transactions there, like acquiring Duo. So now you've switched from a corporate VC to a more of a traditional VC. Can you tell us about the differences? Maybe why one would make a switch like that, and what are the different characteristics of the two different VCs?
Sure, sure. Yeah, I think in a company's life cycle, a journey is a very long one, and we have seen in some of the panels that it's often takes. A company is not built based on one person. It often requires a team of people to help build them, and a VC and a corporate VC, they all bring different value sets, perhaps during different stages of the company's life cycle. And Yoav, you are an early stage investor, seed investor, so there is a certain type of expectations, certain type of skill sets, there's certain type of value propositions that you bring to the table as a seed stage investor that perhaps a later stage investor or a Series A or a corporate VC probably doesn't share. So there is a place and there is a time and there is a value proposition that each one can bring to the table. The way I view any particular company's growth is how can a company take advantage of each one of those different value propositions at the right time. And for some companies, a corporate VC might be the right thing to do in Series A, and others it might be a Series C, Series D. It depends on what that particular product is, what the situation is, and also depends on the corporate VC. And from what I did before to what I do now as a venture fund, a traditional financial venture fund, it is all based on bringing our expertise that I talked about, our experiences, and bridging the gap to various different organizations, various different channel partners, various different technology players, and see how that can add value to each one of our portfolio companies.
And Sunil, you're with one of the largest corporate VCs in the world, if not the largest in deal volume, certainly in this country. And by the way, I think Israel is almost 50% of the VC dollars invested are from corporate VCs. Can you give us your perspective on corporate VC versus traditional VC?
Yeah, sure. Look, I think Karthik is right. There's for every stage as you build your business, there's a right investor for you, right? And you have to think about who that is. And we think of partnering with entrepreneurs as a true partnership, and it's a two-way partnership, right? We're not just giving you dollars. We actually want to partner to build a business. Some of the things that we've looked to kind of add capabilities to our platform has been one I mentioned earlier, which was kind of recruiting and team building. And we also have institutionalized this. We also have what we call a portfolio development team. About 12 people run that exclusively for our companies. But I think the biggest differences are we have the luxury of kind of tapping into 100,000 engineers basically at Intel, right? So when we're looking at a diligencing company or you have a question as you're building your product roadmap, we have the ability to bring those resources to bear for you, which I think many of our financial colleagues may not have. So that's a big advantage. The one negative thing you can think about corporate VC sometimes that happens, we're guilty as some of our fellow corporate VCs as well. So we could get caught up in the bureaucracy as we try to do this. One of the things that we've done at Intel Capital recently is we have made really a deliberate decision to move quickly and much faster than we've ever done in the history of our 30 years almost in our existence. And you'll see now most of our partners and our team is moving as fast as many of the financial investors in the VC business.
Good. Ariel, Nitin, do you have a perspective on this?
Yeah, I think it does depend on who the corporate VC is, and those can vary from those who have their own investment arms or dedicated investment arm investing from the balance sheet, or if they're technology providers like Intel, like Cisco, or customers sometimes are corporate VCs as well. So I don't think any is right or wrong answer. It's recognizing where you actually fit into it. We've had the pleasure to actually invest with both Intel and Cisco and have had great experiences. In each of those cases, the entrepreneurs have actually walked in knowing what the differences are, and just being open about it. And for instance, if it's a technology-centric corporate VC, thinking about how much do you want to, how much control do you want to give in, and it's okay to give board seat. It's okay to have certain ownership as long as you kind of know going in. In many cases, entrepreneurs are very particular about it. If I were to have certain ownership from one particular corporate VC or one large corporate arm for that matter, and a board seat, does that reduce my chances of actually getting acquired from someone? So I think that's the way I would think about it. It's we're fortunate that the two on the, or I guess 1.5, Karthik from your past, they've actually kind of behaved in the broader investment community in a very, very responsible way.
If I could add one more comment, especially based on my prior experience and what I have currently, when I was at Cisco, the challenge, one of the biggest challenges I used to face from many entrepreneurs was almost getting in bed with a company like Cisco too early, or in a stage where they would be viewed as somehow related to Cisco, and so not approachable by some of the other players. That's a constant challenge that entrepreneurs deal with, as well as CVCs have to deal with. And in my experience, there are ways to solve for that and not necessarily get weighed down by one way or the other, both on the CVC side as well as the entrepreneur side. So having that experience helps me view now as being a financial VC, how do I unlock each one of those opportunities for my portfolio companies at the right time and make them successful and bring the best value for my portfolio companies at the right time from the right other CVC participants.
Yeah, I mean, I think no markedly different thoughts than what have been already shared. I think there's, corporate VCs add a lot of value to the overall ecosystem, and Intel's a great one that we worked with in the past, as well as others. I think an entrepreneur just has to be aware of the pros and cons and of working with them, and they're mostly pros, but in some situations it can. There are certain things that you probably want to just be aware of. On the positive side, there's incredible resources that these VCs have, much greater than most financial investors, in order to help the company grow, in order to help bring the company to market through channels, through partnerships and relationships, and so those are all great values that a company will get by taking on a corporate VC. The flip side is that there can be the perception that if you take money from one corporate VC, then their competitors you might be less likely to develop partnerships with them. Something that you can mitigate to some extent by actually taking money from multiple corporate VCs in the same competitive set. The other thing that we always counsel our companies to just be very careful about is the kinds of terms that corporate VCs put in as part of funding rounds. Things to be just particularly careful about is rights of first refusal, information rights, and things like that, which just make it a lot more difficult for a company as it explores options for exits, particularly in M&A. But on the whole, it's a very positive thing.
Great. Ariel, I'll stay with you actually. I want to talk about specifically regarding Israeli security startups and helping them penetrate the U.S. market. You're an investor in a company I'll classify as Israeli, Big ID, and you are here a lot in the country. I know because one time we were sitting on a plane next to each other. That was when Brexit happened. I don't know if you remember. But tell us about Israelis, entrepreneurs in security penetrating the U.S. market. How do you help them, and how do you think they should be helped?
Yeah, sure. First, I mean, I think Israel is a great place to find young cybersecurity companies in general, because there's just such a vibrant and healthy ecosystem here that seems to help companies grow better on a per capita basis than anywhere else in the world. So that's fantastic, and that's one of the reasons I love to come back here. The pattern that we've seen being very successful is the one where the company gets started in Israel, the technical engineering R&D team is built up largely in Israel, and then some of the initial customers go to market get built out in Israel, but then when the company is getting ready to scale and grow, then some part of the go-to-market team, ideally the CEO, relocates to the US and starts building their go-to-market team there. It's very hard, I think, for an Israeli company to be building that function remotely from Israel, particularly if they're going to go after the U.S. market, and 50% of enterprise software gets purchased by U.S. buyers, U.S. companies. So, the most successful template is where the CEO goes and relocates to the U.S. And we have obviously a very healthy community and network that we can plug them into for executives, for hiring, for for other companies that they can learn from, partner with, and just build relationships with. But I think that is the first thing that has to happen, is that relocation. And I know you coach a lot of your entrepreneurs to do the same.
Absolutely. The rest of you guys about helping Israeli security entrepreneurs in the States?
Yeah, so we do actually. We have a team here, investment team, obviously in Israel, but entrepreneurs who have started here have moved to the U.S. We have folks moved to New York, and I'm seeing there's a trend lately of Israel founders moving. At least one of the co-founders moving to New York. Exactly what Ariel's saying. Look, the go-to-market part is probably the most important as you scale a business, right? Originally, you focus on the technology, the problem you're solving. But without the go-to-market, you can't really build a big business, and that's most of the as Ariel pointed out, most of the buyers are in the U.S. for enterprise software. So we're seeing it successfully. I think there's some traps there as well. Some companies try to do it too early, for example. You want to make sure your timing is right. You also want to think about you don't want to get ahead of yourself by spending to get people on board and realizing that, hey, we haven't really figured this out in terms of going after the bigger customers. So there are some traps, but otherwise, we've seen pretty good success in our companies.
Yeah, I think a lot has been shared already. I think the stage that we invest in is Series A and some B as well, but a lot Series A, and especially when companies have maybe one or two customers. And many times in those Israeli companies that we look at, the customer might be actually in Israel. So as they move in, and this was discussed in the previous panel with when the entrepreneurs are actually kind of talking about it, it really is critical to kind of get that one anchor customer in the U.S. And there are probably 30 or 40 companies where the others in their industry, they actually look forward to that particular CISOs and they take that as a direction. So I think most people know, and you've done with your firm, you've done a great job in just sort of connecting some of the Israeli startups with specific CISOs. I actually think that's kind of fairly important. It's not just having a U.S. customer, but having one of those few anchor customers where others are actually looking into it. So, and that's tactical, but that could be strategically probably the most important thing in an early life of a company.
I think the guys here covered most of the ground. I'll just add one more point. It's primarily on the soft skill side, and this was also discussed in the previous panel. When an entrepreneur moves, especially a technical entrepreneur, I mean, we see this all the time with Israeli entrepreneurs as well as European entrepreneurs. There's a little bit of a culture shock. There's a little bit of how do you play the game in the Valley? I mean, I'm from the Valley, and you can probably say the same thing about New York or Boston or any of the other favorite destinations for entrepreneurs moving to the U.S. You have to adapt to a certain way of conducting business in a new environment. And that's an area where us, as well as many of my peers here, are able to provide coaching, guidance, based on our own experiences. And I think that's very valuable. That is, in fact, one of the most important things a VC can add value early on in the transition period, because you can hire a salesperson, head of sales, that comes probably day 2, day 1. You are still the CEO going and selling to your first customer, first 5 POCs. You have to learn to speak the language that is spoken in that environment. So there's a little bit of coaching required. There's a little bit of trial and error required. So we help them with that.
I think actually that's a really good point. I just want to emphasize that. We see that not infrequently with Israeli CEOs, particularly that come from more of a technical background, coming to the U.S. And the first thing that they need to do is hire their leadership team in the U.S., their VP of sales, the VP of marketing, maybe a CFO at the right stage. And that's an area where there's a lot of battle scars, because they're typically they don't have maybe the right eye to find and filter the good ones from the bad ones. And so there's a lot of hiring mistakes that happen at that stage, which creates kind of a folklore of being careful about how you hire that first set of VPs. And very often what we see happening is that there's a reluctance to hire that, the really good with the right background VPs, and they kind of relegate down to maybe hiring good directors that are up and coming, because those are a little bit easier to measure and engage. But that's an area where CEOs can really leverage their investors, because we interview these kinds of folks all the time, and we have certain kind of pattern recognition that I think we've developed. That I think that's a really good point to emphasize.
Great. So this is a security conference, and we can't have a panel without actually talking security. And so I'd love to ask the panelists, what do you think are the hottest areas of security investing right now? So as you look at your deal flow, what gets you most excited? What are some areas of innovation that we should be paying attention to?
I think, sorry, that's in the 5 minute a little bit. All of us are probably looking at some of the same areas. What is hot actually changes on a yearly basis. And if you think about going to RSA, I almost can recognize a theme from the last 5 years. Each one has a different theme, and then the next year is a different theme. I've been thinking about or chasing a certain type of problem that potentially someone solves in the near future, and that's an area that I'm very interested in. If you think about all the hybrid environments that pretty much every customer has, we have these siloed offerings, whether it is for container security, congratulations, Twistlock, and our public cloud security, RedLock. There's got to be some success story with the word lock, so I have to remember that for my next companies. Or PureSec for serverless. So each one of them is essentially a silo in how a customer views and uses the technology, but in reality, it's a hybrid environment. Any one of those customers perhaps has the same workload running in each one of those different environments, but they have to use 3 different tools, manage policies 3 different times in 3 different ways, and not necessarily have interconnectivity across each one of those areas. And guess what? There's 1 guy or maybe 2 guys or 2 gals managing each one of those, and they're not necessarily talking to each other, or it's just a very, very challenging environment for CISOs and their teams to manage that. Ideally, the utopian solution connects all of those different areas, provides 1 pane of visibility, 1 pane for control, 1 pane for threat detection. It is very challenging given that each one of those environments have been developed by each completely different companies, whether it is AWS, Microsoft, or Docker. Each one of them have their own standards. Each one of them have their own technology stack. And it's difficult to bring all of those different pieces together. But I think that certain companies, certain technologies are making progress in the right direction. And that's an interesting space for me. But there are many other sub-siloed verticals that all of us have been interested in. But that's one utopian holy grail problem that hopefully somebody solves in the near future.
It's a tough question because by the time an area becomes hot and everybody's talking about it, it becomes less of an interesting area to invest in. So it's, I can tell you about some of the things that I have invested in that I found really interesting. But as a broad theme, there's been an enormous investment in tools that generate signals, right? That tell you when something bad is happening, that detect the bad, and the cost of those tools has been a lot of operational overhead on security teams, because for every new tool that gets purchased, it's very rare that a tool goes in and just prevents bad stuff. More often than not, it'll prevent some things, but then it'll detect others, and so now you have to have an operations team that's sitting there and watching those new tools that you just bought and figuring out which one of those are false positives, which ones are real ones to chase, and so on. So anything that improves that workflow is something that's interesting, whether it's automating the way that the SOC works or giving better tools for correlating alerts that are coming from different disparate tools together into a more unified, holistic view of what the actual threat and risk posture of an organization is. That's one area that has had a decent amount of investment, but I still think is something that's interesting to watch. We made because there's there's just a massive shortage of as you've heard from many other folks talk about, massive shortage of security professionals, and they can't be hired fast enough. We actually made an investment in a company that does managed security last year, which is a little bit contrarian because that's not your typical software company. But that's a company where you can, as an organization, outsource some of your tier 1 SOC support to this smart group of people, and then they'll build all the tools that they need on the back end in order to do all that correlation that I just described and hand you kind of the higher level signals. But automation, I think, is one big theme that I think will continue driving investments.
Yeah, no, I think I share that. Look, there are 3,000 plus security companies in the world, maybe 3,500, something like that. So the space is crowded. I think, our own CISO, Brent, has taken down, when he took over about 3.5, 4 years ago, we had about 400 plus vendors, and he's down to 80. So I think the way you think about, what is hot or where you should really focus, think about replacing the number of vendors out there. So take a problem, whether it's what Karthik mentioned or what Ariel talked about, but think about how you can replace, when you go to a buyer like a CISO, telling him you can replace 2 or 3 solutions that he's using is going to get him excited, because he's not looking to add, or he or she's not looking to add another vendor to their security profile. So that's really important. The area is absolutely right, like automation. We've all talked about now for several years just the lack of skill set in this space, and it's hard to hire people. So what is the solution? Solution is automation, right? So machine learning. If you look at machine learning 4 or 5 years ago, it was very nascent. Today, machine learning is doing exactly that. It is automating. I don't like to use the word AI. We're not there yet. But I think if you just look at the number of things that are being automated in the infrastructure, that's going to continue to happen. One company that I recently met, they're trying to basically think about the future as machine versus machine. So today we have a SOC, we've got people kind of intermediating alerts and so forth. But what about a world where you don't have people? And you'll have the bad machines and you have the good machines. So that's where we're moving into automation. So that's kind of a hint in where you guys should focus on.
I read this great joke the other day about AI and ML that I want to share. Do you know the difference between ML and AI?
PowerPoint?
If it's written in Python, it's probably ML. If it's written in PowerPoint, it's probably AI.
That's a good one. All right, speaking of jokes and sticking with the artificial intelligence, what's the difference between a data scientist and a statistician? A data scientist is a statistician with a Palo Alto zip code. That's for O'Reilly, that's not my joke. So kind of coming back to the topic, attacks are pervasive right now. Like, pretty much all the solutions that exist today, they've kind of gone a little bit better than where we were a few months ago, a few years ago, but they're still getting, the attackers are still able to penetrate, which kind of comes down to the basics of it's like your network, your application, your code, your workload, the human productivity, whether it's SOC analysts, they all can actually be improved in some way or the other. So, where a lot of the answers you'll hear, and for me as well, what we're looking for is actually a function of what we don't have in our portfolio. So, it's like we have an email security company, so we're not actively looking at email security. We don't have a network security company, and I think network is a huge opportunity, especially with the improvement in statistics or data science, that now we can actually, measure 40 gig of traffic coming in on north-south or east-west. So, that's an example that we're actively looking at. So, I think there are opportunities across the board. I like the way you actually put it, which is, if you can actually combine some of those and reduce the amount of vendor overload or human overload that's required to solve it, that's actually a really good way to think about it as well. But certainly, even if it is, it's like, it's incremental improvements. And in general, software, and that's true for cybersecurity, but it's true for pretty much all software, has 5 to 7 year replacement life cycle. So, there is going to be 5 to 7 years of where software is going to get better. Why? Because the enabling technologies underneath are getting better. The technologies that are available for entrepreneurs starting a company in 2019 are significantly different than what was available in 2012, 2014. So, certainly the quality of software is going to be better. Which in cybersecurity, what's available to us is, unfortunately, attackers also have better technology. So it's sort of an ongoing arms race that it's great for entrepreneurs. It's not great for overall society and economy, but it's great for entrepreneurs. It's great for investors here as well.
Great. So I know we only have about 4 minutes left, and I wanted to bring up the topic of venture returns and venture as an asset class, specifically relating to security. So I'll ask some questions, but I can only afford one answer per question because we only have 4 minutes. So valuations, going in valuations in security, are they going up or down? Anybody want to talk about that?
They're going up.
Can you elaborate?
True for everything in early stage startups, but certainly in cybersecurity, and particularly for Israeli startups, there used to be a time when there was a kind of an arbitrage opportunity where the value here was lower, valuation was lower. It's not the case right now. It's equivalent to the valuation you get for a company started in California. But just generally, I think there is a 1.5x to 2x on pre-money value than it was 3 to 4 years ago. This is anecdotal.
A or B or seed? Or?
At A, B.
A.
I don't know about seed, but A and B for sure. Actually, in C and onwards as well. So this is very anecdotal in just some of the numbers that we've seen. It's not a full universe, but the values are higher.
Okay. So one of the other three panelists, why do we see so many acquisitions in cybersecurity? It seems like every other week a company gets acquired. Why is that?
It's been the number one sector in investing for the last 6-7 years, and the number one sector in exits, believe it or not. And primarily it's been acquisitions. We've had a few public companies go out, like we had Carbon Black go out last year, CrowdStrike went out this year. So I think, look, it's a space where it's at the board level and to the management level, it's got a high priority. And people are going to continue to fund the space, and buyers who have holes in their solutions are going to fill those holes with these new innovations.
Okay, and sometimes cybersecurity entrepreneurs get heat for selling early. And, some VCs are saying this sector, it's a lot of small exits. Do you think that's the case, Ariel or Karthik? And, what do you do about it?
Well, I don't think it's any different than any other sector, with the one difference being that there's just a lot more companies in any given category, right? And so there tends to be, if you're looking at, pick your favorite category, at least half a dozen different companies that are, started in the last 5 years that are trying to go after it. And so, take that, fast forward it to the number of IPOs every year in cybersecurity, and obviously your company's either going to go bust or sell, right? Because the number of IPOs just don't support the number of security companies that get invested in. So it's hard to answer that in the abstract. You're always looking at the numbers, and we have a blog a post that we wrote up about the Mendoza line, right, which is kind of this hypothetical line that a company needs to be above in order to get to an IPO trajectory. And if it's tracking above that, it'll keep contracting. It'll keep attracting venture funding, and if its growth rate will support a public outcome. And if it's not, well, then you probably want to find a strategic outcome for that company. And today, the number of public companies that are sitting on very healthy valuations that can afford them to be acquiring smaller companies that they need in order to stay relevant is also at a record level. So that creates a lot of, a good environment for these acquisitions to happen.
Great. And the final question for Karthik, you're going to get the last question. Are you bullish, from a venture returns perspective, are you bullish about investing in security into the future, and why?
Hopefully I am, otherwise I'm in the wrong job or wrong profession. Look, I think it is. Cybersecurity, I think Sunil mentioned earlier, we are in an arms race, right? I mean, there's always going to be bad guys. They're always going to have better technology. The good guys are catching up, and hopefully one day the curve overtakes and we are proactive in terms of our defense as well as offense. But cybersecurity is a very important conversation at the board level. It is a threat that affects everybody. Enterprises. Gone are the days when the attackers targeted only the top end of the enterprises. Now they're going after middle market customers, so the hurt is felt by everybody, which means everybody has to spend, which means there is a lot of opportunities for entrepreneurs. There is a lot of opportunity for investors. I've used this phrase before, so I'll use this at the risk of repetition, although it's a different audience. Cybersecurity is like Palo Alto real estate. I don't think it ever goes down.
And with that comment, we'll end the panel. Please allow me to thank my panelists.